The path for Fong to be CEO has been set in stone. Well, it's been set for years and years. He was promoted to Chief Operating Officer in 2018. And he's been the CFO of the company since 2015. So after 2 years as president, it made sense. It's very clear to the shareholders he was the heir apparent. And we hired a new CFO, a full-time CFO, Andrew Kang. He joined in May. And so once Andrew joined as CFO, that cleared the way for Fong to become president and CEO. I have been working with him hands-on to transfer the entire business to him for 7 years. It turns out that in the last 6 weeks, Bitcoin traded down. And when Bitcoin traded down, we ended up taking indefinite intangible charge in our Q2 results. That by the way, it's like a $900 million charge. It was very colorful. I think it was cited by some critical journalist. But we'd already covered 700 million or 750 million of that charge by the time we even reported it. It's just the GAAP accounting doesn't let you write up your assets. So if you're positive, you say, okay, well, this is normal succession and appropriate corporate governance. If you just want to write something trollish, you would pair the non-cash write-off with me taking the executive chairman role. But obviously, it has nothing to do with that. It's always been the plan for me to be executive chairman and for Fong to be the CEO.
But so why not have waited for better timing, no?
Because we were waiting we don't run the company based upon Bitcoin volatility. And we don't run the company based upon indefinite intangible accounting charges. That would be putting the interest of our shareholders after the optics of a random troll. We run the company based on what's best for the shareholders and what's best for the employees and what's best for the customers. So the trigger for us to promote Fong was the arrival of Andrew as the CFO. Because Fong was the president and CFO, and you can't have a public company where the CEO is also the CFO. It would be inappropriate to do that. Like, only in the most dire of circumstances would you ever do that. So when Andrew arrived, we wanted Fong to be CEO, and the accounting charge is an intangible, non-cash charge. It really, again, as I said before, Bitcoin traded down to 17,600. We wrote our assets down to that level. You know, Bitcoin is trading at 23,900 right now. We haven't written it up, but I mean, the shareholders understand this. You can see in their reaction to the announcement.
I want to get back to a point you made about the volatility, and that's an important one to bring up here. Do you think this makes the case that maybe Bitcoin just is not for everyone? That, you know, we're not talking about right now what we've seen, a correction of 10-20%. I mean, this is extreme volatility. Is it just not for everyone? Like, maybe most folks just can't stomach it and can't risk that money.
I think that the way to think about investing in Bitcoin is you should only invest what you're going to hold for 4 years or longer. And ideally, it's generational wealth transfer. And then you should dollar cost average into it. And for the average person, if they dollar cost average into it as a strong long-term store of value, they'll be fine. And the metric you ought to stare at is probably rolling the simple 4-year moving average, right? And if you look at the simple moving average over 1,458 days, it very rarely touches that point. It went slightly below it in the depths of the crypto crisis, and now it's trading above it. That number is 22,266. So if you think of that and you say, I know I'm going to hold at least 4 years, then it isn't that anxiety inducing. If you have a short time horizon, like you want to make money in 4 weeks or 4 months, it's going to be much more stressful because it is a volatile asset. And the volatility impacts two types of people. It impacts people that are short-term investors, that they want to make a quick buck or they just never want to lose money. And the volatility also impacts public companies or companies that rely heavily on GAAP accounting, because the volatility is detrimental to the accounting treatment because you have to always write it down. You can never write it up. And so you end up with a circumstance where you could be holding $1 billion and it looks like you have $200 million and no one can tell the difference unless they go to the trouble to figure it out themselves, and that's very opaque. So I would say that people that really are fixated upon GAAP optics, right, they'll be a little bit troubled by it, and then people that have very short-term time horizons are troubled. But for the rest of the world, it's a pretty good idea. It's the best. I've just pointed out to you, we've outperformed every asset, every big tech company, every enterprise software company, 97% of all the companies using this strategy. So if the volatility is the price you pay for the performance. And if you can't stomach the heat, right, you can't be in the kitchen. So I would rather win in a volatile fashion than lose slowly in a non-volatile way.
I saw you last in April of this year. I was moderating a panel with you at the ETF conference, and there was so much enthusiasm at the time, right? I think Janet Yellen had spoken that week saying crypto was transformative. Biden had just signed an executive order kind of greenlighting the crypto space. So there was a lot of excitement. Walk me through where you think things took a downturn. I mean, was it the inflationary scenario? Was it incoming interest rates? What do you think was the catalyst?
Yeah, I mean, if we're talking about what's caused the crypto crash, I think that it was triggered first by the interest rates, right? The tightening of the Fed. And that put pressure on all risk assets from the beginning of the year. And I think the next catalyst was the Terra Luna meltdown, because in essence, they had $50 billion worth of Luna and UST backed by $1 billion or $2 billion of real assets. So that was very unstable, and that algorithmic stable coin was just an accident waiting to happen. It's almost like they borrowed $20 billion and agreed to pay 20% interest on it. And they were going to issue equity to pay the interest. So they're going to issue Luna in order to pay 20% interest on UST through that protocol. And that was an accident waiting to happen. There's no way that was sustainable.